Most of us remember 1929 as a single moment. One day, one collapse, a stock market crashing to the ground in an instant. And then, the Great Depression. But the truth is, history almost never works that simply. The crash of Wall Street in 1929 wasn't just one bad day. It was the end of a dream that had been building for years. A system inflated by debt, amplified by leverage, and comforted by the lie of "this time it's different." That day, the world learned something crucial. Trust is the most fragile currency of all. And once it's gone, neither central banks nor politicians can bring it back overnight. When we separate panic from analysis and look calmly at what happened, we see this. 1929 wasn't an explosion. It was a process. Years of excess finally reaching an unbearable point. And if you're thinking, that's an old story, men in fedoras, ticker tapes, black and white photos, stop. Because the same ingredients are right in front of us today. Cheap money, speculation, inflated asset prices, and a culture that says markets always go up. Here's the real lesson. People always want to believe that whatever is happening now will last forever. Look at America in the 1920s. The war was over. The country was wealthy. Technology was exploding. Cars, radios, refrigerators. Everyone was convinced the future was bright. But behind the curtain, the cracks were growing. Farmers were drowning in debt. Wealth was concentrating in the hands of a small minority. And banks were handing out credit with almost no oversight. The stock market became the playground of the era. Strangely enough, even ordinary people became investors. And most of them weren't using their own money, but borrowed money. Margin trading was everywhere. With $1,000, you could buy $10,000 worth of stocks. As long as prices kept rising, everyone won. But at the first real drop, everyone was forced to sell at the same time. It was a ticking time bomb. And the most interesting part. The warnings were there, but no one wanted to listen. Presidents, bank executives, famous economists. They all said, everything is fine. They were smart people. But intelligence is useless against collective optimism. Then October 1929 arrived. First, a small tremor. Then panic. And within days, fortunes disappeared. But the real disaster wasn't the stock market falling. The real disaster was exposing how fragile the system truly was. Banks collapsed. People lost their savings overnight. Businesses couldn't get credit. Unemployment exploded. And the world turned inward. Global trade nearly froze. Protective walls went up. A crisis turned into a global depression. None of this was inevitable. It was the result of bad decisions, delayed responses, and blind faith. And that's why 1929 still matters. Because the mechanism hasn't changed. The dot-com bubble. The 2008 housing crisis. Crypto manias. Always the same cycle. Cheap money, excessive confidence, collapse, blame. And every time, the same phrases. This time it's different. The fundamentals are strong. Everything is under control now. These are the most dangerous words in history. Today, we're in a similar place. High debt, inflated markets, new arenas for speculation. And once again, millions of people believe the system will protect them. But history speaks very clearly. When the system shakes, those at the bottom get crushed. The real lesson of 1929 is this. It's not panic that kills, it's being unprepared. Real wealth isn't numbers on paper. Real wealth is knowledge, resilience, and things that create real value. And you have to ask yourself one question. If the system stumbles tomorrow, will you still be standing? They say history doesn't repeat itself. But if you don't understand it, it will always catch up to you. If this narrative gave you a different perspective, subscribe. History hides the answers. I bring them to light.